good morning, and welcome back to my weekend market analysis series. In preparation for next week's trading session, we are taking a look into the XAUUSD market dynamics, where we hope to understand the current behavioral pattern of market participants by exploring both fundamental factors and price action signals, giving us a clearer picture of what to expect in the days ahead. Don't skip the video. This content is your guide to understanding the underlying factors influencing the character of price action on the XAUUSD chart for this coming week. Last week, we saw gold break into new territory, reaching an historical high of $2,500, driven by a drop in US Treasury bond yield and growing expectations of significant rate cuts from the Federal Reserve. But is this the peak or just the beginning of a bigger move? To start with, let's revisit the previous week's trading setup. And of course, what you're seeing on your screen, this was what we were looking at prior to the beginning of last week's trading session. And of course, we have various parameters that we were looking at. We had the trend line, price was sitting above the ascending trend line. We had the robust demand zone between the 2,350 and the 2,365 level. We also had our key level. As you will see here, price was sitting just right above that structure prior to the beginning of last week's trading session. And what we were looking out for was buying pressure above this key level to join that uptrend move. And of course, this was exactly what happened. We joined the momentum right above the structure, and in fact, we were part of this 850 pips move all the way into that record high at the $2,510 area. For educational purposes, you can find a detailed breakdown of each of our entry points from last week right in the description box of the current video you're watching. So, with a clear picture of where we are coming from, what lies ahead of us? Moving forward, it's crucial to recognize the persistent demand for gold from central banks, which continues to fuel the bullish sentiment surrounding the gold commodity. It's also worth noting that with the Fed on track to begin cutting rates next month, we are likely to see a surge in Western investors coming into the market and repricing gold higher. This suggests that the path of least resistance remains upward, but what path will price action take to fulfill this sentiment in the week to come? Could this be the perfect storm for gold to soar even higher? Well, in this video together, we are going to be dissecting the XAUUSD charts, breaking down the technical overview to identify the major trend, key level for the coming week, and structural patterns that could guide our trading strategies for the next move. Before we begin, remember this presentation is for educational purposes only and not financial advice. Trading carries risk, so make sure to consult with a financial advisor before making any investment decisions. With that said, let's dive right into the business. So our first point of contact for this week is going to be on the daily time frame, where I took into account the character of price action in the last 3 to 4 months, and that is since the beginning of the month of April. And what I was able to identify here was a distinct structure that further emphasized the strength of the buyers in this market. As you will see here, price had consistently, though within a consolidation range, had consistently found series of higher highs and higher lows, evolving into a structural pattern that looks more like an ascending channel. So if you see here, connecting the series of higher lows, we have the support line of the ascending channel, and of course, by connecting the series of higher highs, we have the resistance line of the ascending channel. And of course, when price action remains within an ascending channel, it makes a lot of sense that we look out for buying opportunities at this point. However, if we take a closer look at the structure, you will see that as at the end of last week trading session, price, though found an historical high, closed exactly at the resistant line of that ascending channel to make it a crucial moment to look out for new trading opportunities. Now, the question going into the new week is, will price action respect the resistance line just like it has been doing since the month of April, inciting some selling pressure, maybe to incite a sell off, which could be as a result of profit taking activity? Of course, we all know when price action gets to uncharted territory like this, there is always this fear that grips the market where those who are taking advantage of that huge move to that upside may want to be doing some profit taking activities, taking off their profit from the chart, and this could lead to retracement move, consolidation phase, and even choppy market conditions around this area. That is one scenario. And the other perspective is whether price will break out of that resistant line of the ascending channel to incite an uptrend continuation. Now, to navigate this important confluence, I have a simple trading setup on the 4 hours time frame, which we will be using to guide our trading decisions for next week. But before we go into the 4 hours time frame, it's time to pay attention to upcoming economic events that will be influencing the sentiment in this particular market. By checking the economic calendar, we can identify how upcoming events might affect price action. This helps us spot potential correlations between key economic releases and specific technical patterns on the chart, allowing us to time our positioning more effectively. Now, considering the assets we are looking at for this week, we will be focusing on high impactful event from the United States economic docket. Now, the first event for this week is coming in on Wednesday, August 21, and that is the FOMC minutes publication. This records the discussion and decisions made by the Federal Reserve officials during their last meeting, and it provides us with an insight into the Fed's view on the economy and future monetary policies. Now, fast forward to Thursday, we will be looking at the S&P Global publication from the United States, which offers us an insight into the health and performance of the service and manufacturing sector of the US economy. Now, on that same day, we will be witnessing the beginning of the gathering for the Jackson Hole Symposium, an annual event where central bankers and economists discuss global economic policies, and it often sets the tone for future central bank action. And this event will be happening on Thursday, Friday, and Saturday. Then on Friday, August 23, we will be looking forward to the Fed chairman's speech during this event, where his remarks will be providing us with insight into the Fed's monetary policy stance, economic outlook, and potential future policy actions. So these are the high impactful events we will be looking forward to next week. And of course, we do understand that the anticipation of this event has its own way of influencing how market participants will be anticipating this event, which definitely will reflect on the chart as structural patterns to look out for trading opportunities. Now, talking about structural patterns, let's scale down into the 4 hours time frame. Now, on the 4 hours time frame, I was able to identify a simple trading setup after taking into account the character of price action in the last 6, 7, or 8 weeks. Now, what I did here was to first of all acknowledge the trend on the 4 hours time frame, which is obviously bullish, as you will see here. After connecting the series of higher lows, look at what we have. We have an ascending trend line, and you know how we treat our ascending trend lines in this community. As long as price remains above the ascending trend line, we will continue to look out for patterns and structures that supports the idea of buying these assets. Now, in addition to the trend line, is going to be our key level, which is going to be serving as a yardstick guiding our trading activity for next week. And you remember how we use our key levels. As long as price remains above our key level, we look out for patterns and structures that support the idea of buying, and we are not going to be selling unless this key level is broken to the downside. Now, my key level for next week has actually changed, and for this coming week, I'm going to be using the $2,475 area. And look at how this area has been a significant determinant of price action since the mid month of July. As you will see, this area was serving as a barrier for buyers for about a couple of weeks. Look at what happened here. Every attempt by buyers to break out was negated by sellers, as you will see here. The same thing also happened at the beginning of this month, and during the second week of this month, it was also serving as a selling niche before we finally saw the breakout of the structure during last week's trading session. Now, with a breakout of the structure hitting an all-time record, will this turn out to be a false breakout or a true breakout? Now, what I'm looking out for next week is this. Will price action come back, retest the structure that was just broken, find some buy pressure to incite an uptrend scenario? And in fact, if we look at the distance between where price action is and that key level, we are looking at over a 300 pips distance. And it's something I want to be looking out for to capitalize on if I do identify selling pressure below the 2510 area during the early hours of next week. So that is one scenario I'm looking out for. If price drops, I will be looking out this, and if the emergence of buy pressure comes in here, I'll look out for buying opportunity to continue the uptrend. And if selling pressure persists below the 2475, we may be seeing price action crash into that ascending trend line one more time to continue that uptrend move. However, if price does not do that, and if we didn't see selling pressure below the 2510, and instead price action breaks out of the 2510 area, or let's say we cite a form of uptrend continuation pattern like a pennant, flag pattern, or bullish rectangle pattern, then a breakout of the resistance line will give us that opportunity to join the uptrend move. Trust me, I will be with you in the comment section on Monday morning after monitoring how market participants will be reacting to this particular structure during the early hours of the new week to give us an insight into how we are going to be going forward. If you have found this content helpful and useful for your independent trading decision this week, I will be glad if you could hit the thumbs up button. Your support not only means a lot to me, but also helps the video reach more traders who might um, benefit from this content. Thank you in advance for doing so. If you haven't already, make sure to subscribe to the channel for more insights and updates. By subscribing, you'll always stay informed about my latest videos and commentaries, and you will also be the first to know whenever I drop new content. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.